Good afternoon, traders. It's just after lunchtime, and I think the big story here is shaping up to be the big chop, little chop story. You know, we've been talking about this on and off for some time. Of course, little chop was defined by that rally that we saw on the 17th, the high-low rally, that range that we kind of stayed within for better than a week. Finally broke above it, and remember, once we broke the little chop, we ended up smack dab at the resistance of the big chop. And then that resistance in this area, of course, determined by these old highs, sent the market lower. Well, just as we were bearish at resistance, gang, we must be equally respective of these support levels now. Now, I'm not saying we're going to rocket right back up again, but, we got to think about the potential for bouncing from this area, or even maybe flattening out if traders aren't necessarily bullish enough to bounce. Just don't assume a break here. I don't think that's going to be the scenario. So from big chop to little chop, breaking little chop, back into big chop, big chop meaning the wider range. And the main key here is it is chop. So we have the stochastic here. The stochastic is suggesting, by the way, that we are not quite in the area of oversold just yet. Now, the wick that's being left behind, okay, the last two wicks, in fact, the last three are showing what? Hesitancy by the bears here, gang, right smack dab in that multiple layer cake of support. Remember, chop lacks organization, and you cannot have a trend without organization. So as pessimistic as we're probably seeing the tone here today, I'm expecting some exhaustion from all this selling. I know it sounds kind of counter to all the bearishness that we're seeing, but by the way, think about all the bullish BS that we saw up here at the top of the range. Up here, it was all sorts of nothing but rainbows and sprinkled cupcakes and whatever else. Fireworks in the sky, right? So the tone changes again. It doesn't mean anything, gang. Why? Because as long as we're stuck within big chop, we're not going anywhere. As long as we're having the confusion that we can see with the red, the blue, and the green grab candles, as long as we are sitting at that 2 to 4 o'clock wave angle, okay? We have no organization of sentiment and momentum. Without organization of sentiment, there is no momentum. Without the continuation of momentum, there is no trend. We certainly have organization of sentiment because we're able to carry with momentum from the top to the bottom of the range and vice versa. Don't assume a break in a choppy market. In fact, I'm going to go ahead and start thinking that come tomorrow, even later today, we're going to start to see not necessarily risk back on the table, but an easing of all that pessimism. So before I just go ahead and shift gears and say, okay, we're back to risk on, we're going to at least say, hey, it looks like risk off isn't really the dominant psychology. We'll start to think about a slowing of that pessimism, a little bit of stabilization, and then the market's going to start to glom onto positive stories. Things aren't as bad, Europe is this, auctions are that, yields are, whatever the story is, whatever fundamental they want to start shifting the focus to. Remember, gang, fundamentals are a psychological game. All these fundamentals are always in the market to some degree. It depends on what we decide to discount, what we decide to focus on. I hope you see the kind of game that is played, because there are a lot of fundamentals out there in the market right now, but it depends on who is taking the front page, who is in the bold, 24 font type, right? That's what's going to really be moving the market. It's just really that simple. I'm not dismissing fundamentals. In fact, I'm respecting what they can do to the market. But remember, we choose what we want to focus on, right? It's really a matter of what we start to see make its way through financial media, make its way onto the websites, make its way into then discounted into the market. This is hesitancy, gang. Now, it's 1 o'clock Eastern. We are really smack dab in the lunchtime doldrums. So I'm not going to take this price action and say, okay, this is going to be the way we're going to close, because the fact of the matter is we need to get through 2 p.m. Eastern, 3 p.m. Eastern bond close, 4 p.m. close. But if we end up closing today with this wick being left behind, then you can see again one more day of hesitancy. So we're starting to see the pessimism slow. What I want you to then notice are the headlines. Are they beginning to shift? Is the market now starting to have financial media parading some less bearish guests, more bullish guests? Are the headlines shifting to the point where, we're seeing a lot of those pessimistic European headlines now going, okay, we're not as concerned, things are stabilizing, the worst of the news has already been baked into the cake, unless there's something shockingly new. We've dealt with the European elections, the Greek elections, the French elections, etc. And now we can start focusing on maybe, something positive. I don't know if they're going to start glomming onto home prices rising. That's probably something we could start looking at. I don't know if it's going to be something along the lines of looking at tomorrow's trade balance or unemployment claims, maybe not coming in as bad as expected. Bernanke speaking tomorrow, gang. So if there's going to be a shift in psychology, we definitely have fresh fundamentals that are going to be on the table tomorrow, May the 10th, to help maybe stabilize this. That is the story here, gang. So all those risk-off trades, I'm not saying they're no longer valid, but we have to start thinking about the fact that as we reach the range lows, sentiment could shift. Risk off is what we've been relying on. That means what we could see. And here's the way we're going to look at it the rest of the day. I'll come with a separate Forex discussion about, one, are we going to take this move higher if we get it, and look at longer term trend follow. So could we look at, say, a longer term bounce on the Aussie yen? Let me just give you a little idea of what I'm thinking here. So here's the Aussie yen. Could we then say, if we get that stabilization, we can get a little risk on going on, say, on our, for example, 5, 15, 30-minute time frames? Can we start thinking about getting a little bit more risk on these shorter term time frames? Or could we end up with a one thing leads to another, where a little bit of this movement higher, see a wave CCI correction to the upside, could then take me to an overall trend follow on the 4 hour, or maybe if we get a more significant correction, an overall trend follow on the daily. Okay, so could that near term bounce as we re-enter the range, bouncing up higher, could that give us an opportunity to re-engage some of these longer term trend follows that are looking at a more significant correction to the upside being required in order to get our shorts? And quite frankly, the Aussie yen's not alone. Maybe we'll look at a euro yen. Remember, the yen, I'm going to focus on the yen because here, if we're seeing all this yen strength on the pessimism of the move to the bottom of the range in the Dow, what's going to happen here? We've seen all this yen strength on the way down. If we stabilize here, we're going to start to see yen weakness if we stabilize and or perhaps start to bounce. Most definitely if we start to bounce. That yen weakness will then set up what we'd like to see, which are some corrections, longer term corrections. Gang, what I'm going to do here is I'm going to get yen, in terms of yen weakness, we'll take advantage of that, if at all, on short term time frames. But what I'd like to do is take advantage of an overall yen strength. I still think the path of least resistance is still to the downside. I'm still much more of a risk off on the longer term picture. But remember, all of a sudden we're going to see all this optimism start to make its way into the market. Don't forget, it's probably going to set up our longer term risk off trades. So we could get bullish on, say, the euro yen or the Aussie yen, or start play yen strength short term, 5, 15, 30, but then let that set up. One thing leads to another. Some of the trend follows on the 4 hour and the daily. So we'll get into the details of that this afternoon in the members area. Okay, but I want you thinking about the fact that this hesitancy we're seeing on the Dow could start to shift the way we have been trading. All right, thanks so much. I'll see you for the members videos, gang, this afternoon.